Welcome back. Now, South Africa's stock market is set for a major change. The Financial Sector Conduct Authority has approved changes to the JSE's listing requirements, making it easier and cheaper for companies to list. Now, the move aims to reverse years of company delistings, attract new investment and boost South Africa's competitiveness globally while still protecting investors. We're joined now by Andre Visser, Director of Issuer Regulation at the JSE, to unpack what these changes mean for companies, investors and the broader economy or market in particular. Andre, thank you so much for your time. Now, this move coming at a very interesting time where we are seeing a rotation into emerging markets like South Africa, and South African assets are just looking more attractive. Let's start there. Maybe walk us through the significance of the move within this context.
Thank you for the opportunity. It's an important milestone for the JSE. The Fiscus final approval at the end of last year of these new listing requirements. It does deal with the project that we coined the simplification project, and it was aimed at making sure that we've got requirements that are fit for purpose and make sure that our listing requirements remain relevant international, and also that we are able to attract international companies onto the exchange and obviously international investors as well. So we think the timing of this is perfect. If you look at the simplification and you couple it with what we've done in terms of market segmentation towards the end of 2024, the cutting red tape initiatives, we've done lots of work over the years, and I think we're starting to see the dividends coming through with an uptick in listings in 2025, and certainly seeing a healthier pipeline of potential listings coming to market in the foreseeable future.
And talk to me about those returns with some of the earlier implemented regulations. You mentioned there the market segmentation reform that was implemented that also saw the main bourse being split into two. Let's talk about the kind of uptick you are seeing when it comes to the smaller companies listing, because that was mainly to attract or rather retain those smaller companies on the local bourse.
That's absolutely correct. I think if you look at delisting trends internationally, the JSE has been aligned with most of our international peers. But what we have seen in our market specifically is we've seen delistings on the smaller end of the market, so specifically smaller types of companies that have found it difficult to stay abreast with the changes and to remain listed based on compliance issues. And obviously the JSE is only one part of the ecosystem there, but clearly we had to reflect on that. And when we segmented the main board into two segments, the general segment basically provided significant relief for smaller companies. And we think it's played a significant part in retaining those companies on the market. If you go and look at uptick to your specific question, there's about 120 companies that are eligible to move to the general segment, and about 25% of that population have applied and successfully migrated to the general segment. So we think that has played a significant part and will continue playing a part in maintaining those listings on the exchange.
And practically speaking, what do these changes mean, right? Is it easier for companies to list, cheaper for companies to list, easier for companies to raise capital on the JSE?
Absolutely, that's been a central theme. When we consulted with the market, specifically on market segmentation, we asked those companies, investors and other stakeholders what the main pain points were. And that resulted in us making those changes. So I think certainly if you look at the benefits for companies, certainly ease of compliance. We certainly believe that complex requirements lead to uncertainty. And if you have simplified requirements, it's easier for companies to apply. It's easier for investors to understand what their obligations and their rights are in terms of the requirements. And it's also easier for the JSE to apply and hold parties accountable under the requirements. So simply with simplification, you're certainly going to see an ease of compliance by companies. And there are very significant changes that we've made in respect of costs, where we'll see a significant reduction in cost for companies that apply the listing requirements. So I think simplification has been a big theme. If you look at the volume of the requirements, not that that was the main objective of the exercise, but just to give you a sense, the listing requirements prior to the implementation of the simplified requirements spanned over more than 400 pages. And we've managed to reduce that to just over 160 pages. So I think simplified requirements will certainly assist companies, investors, and other stakeholders to navigate the listing requirements, leading to lower costs as well.
Now, Andre, with all these changes aimed at boosting market appeal, how does the JSE make sure easing requirements doesn't come at the cost or the expense of investor protection?
That's a critical question, and it's something that's been central to our entire approach. We've got a very proud reputation of having a market with very robust listing standards, and we've been recognized for that internationally. And in embarking on this process at the end of 2023, we said our sort of compass was going to be, let's make sure that we end up with a product that is simplified, but also balances it with making sure that we've got robust investor protection and maintain very high levels of transparency and disclosure. And I think that the reason for that is very simple. We want to compete with international markets in terms of attracting listings, and investors have a choice. And investors will only invest in markets where they've got trust.
Yeah.
So if we don't maintain our investor protection measures and transparency, we won't be able to attract companies and investors. So that's been a central theme in our approach and our philosophy in adopting the simplified listings requirements.
Just quickly before I let you go, with fewer years on financial disclosure now required for Category 1 transactions, how does the JSE then protect shareholders when large acquisitions proceed without a vote? I mean, there is a big acquisition in the news at the moment where we are seeing a lot of investor pushback.
What's important for us is to make sure that our listing requirements create certainty, regulatory certainty. So it's very important that you've got a robust process when you amend the requirements, where you consult with both investors and companies. And once you put those requirements in place, you make sure that it's clear, unambiguous, and easy to apply. Now, when it comes to transactions, clearly you need to have a cut-off point. And that cut-off point typically with transactions would be when the agreement is signed and the announcement is made. And that's an international approach. It's not unique to the JSE. What that does do, it provides both companies and investors with absolute certainty about what the regulatory consequences are for a particular transaction. So sometimes, based on the market cap of a company, something may be a Category 2 or maybe a Category 1 that may require a shareholder vote. But what is important to note, even if there is no vote, the requirements still demand clear and transparent disclosure of the pertinent and material terms of the transaction. So we think we've got a robust model in place. That's certainly not something that we are changing in terms of this approach. In the simplified requirements, you would still have those robust standards in place.
All right, let's leave it there. Andre, thank you so much for your time and just taking us through that move. Now, that was Andre Visser, Director of Issuer Regulation at the JSE.